Hey everyone! So check this out. We absolutely nailed the first pump prediction, and guess what? The second one just hit today, and we called that one too in yesterday's video. But here's the crazy part. We're already seeing signs of a third pump coming your way. That's right, round 3 is loading up, and we even spotted some major white swan events happening today. You're probably wondering, how on earth do you guys keep predicting this stuff? Well, stick around because it's actually pretty amazing how this all works. But first, let's dive into the big news that just dropped. Bitcoin Magazine is reporting something huge. BlackRock's new Bitcoin exchange-traded product has officially started trading on the London Stock Exchange. This is massive, guys. This is absolutely incredible news. What this means is we're about to see a massive wave of fresh liquidity flooding into Bitcoin. And honestly, I think this might be one of the key reasons we just saw Bitcoin shoot up to... Wait, what was that price again? All right, let's take a look at just how high Bitcoin climbed today. We're talking about a massive jump to 114,000. But here's where it gets really exciting. There's a solid chance we could see Bitcoin push even higher, potentially reaching 124 to 125,000. And get this, that would bring us right back to Bitcoin's previous all-time high. And here's what most people are completely missing. We're likely going to keep witnessing these incredible white swan events, especially if the USDT dominance chart gives us the green light. So that's exactly what we're going to dive into in today's video, connecting all these dots for you. Plus, there were a ton of additional white swan events that came out of the Fed meeting as well. All right, let me break down our game plan for you. So we successfully called the first pump. You can see it right here on the chart. Then boom, the second pump just happened. Exactly as we predicted. But now comes the big question everyone's asking. Are we about to see a third pump? That's exactly what we need to figure out together right now. I personally believe we are because XRP is lagging behind Bitcoin, right? Now, if you take a look at the XRP versus Bitcoin pair, you'll notice it's trending downward. Here's the key insight. XRP is typically the last coin to make its move in any cycle. So here's what we're watching for. When XRP finally starts pumping, that's usually our signal that the market might be ready to cool off. Okay, so for now, yes, we are dumping in the short term. But honestly, it might not even matter at this point because I'm confident Bitcoin is going to keep climbing higher. And if we're right, this chart should continue heading downward. Here's what you need to remember. We're still riding the storm, everyone. That's right. We're staying in this powerful uptrend until Bitcoin drops below the 5-day moving average. So as long as we're above that line, the storm keeps rolling. We're still riding the storm, everyone. That's right. We're staying in this powerful uptrend until Bitcoin drops below the 5-day moving average. So as long as we're above that line, the storm keeps rolling. Let me zoom out here so you can see the bigger picture. Check this out. Bitcoin has been testing support in this region multiple times, but it kept getting rejected and breaking through to the downside. Now here's what's interesting. It's coming back into that same range and attempting to break out to the upside. I believe once we finally break above this zone, that's when things get really exciting. But here's the challenge. There's some serious resistance sitting right here, and Bitcoin is battling hard to push through it. That's exactly why we're seeing some selling pressure at the moment. The key level we need to watch is around 113K. Once we get above that, we should be in much better shape. Now, let's shift our focus to XRP and see what's happening there. This is absolutely wild for XRP. Look at this. The 250 level is acting like an absolute wall, holding XRP down stronger than we've ever seen before. And remember, this is exactly what we predicted in our previous video when we analyzed this chart. This 250 level is being a real troublemaker for XRP. But here's the exciting part. Once we finally break above 250 and start holding it as solid support, we're looking at 270 as our next target. And if we can hold that level, then we're heading straight for $3. You can see how this works. It's all about taking it level by level. That's why I always tell you to be patient and take things step by step. Don't get caught up in the hype and make any reckless moves here. So, 250 is our key level to watch, and I genuinely believe XRP is going to break out eventually. Why? Because XRP is seriously lagging behind Bitcoin right now. While Bitcoin is already pumped way up here, XRP is still sitting down at these lower levels. It's definitely going to catch up. That's just how these cycles work. The question isn't if, but when. I can't give you an exact timeline, but history shows us it will happen. Okay, this is absolutely insane. Check out this insider who just shattered their 100% win rate by making $10 million in profits in just 45 minutes. This person is clearly working with inside information. There's no other explanation. Now, here's where it gets really interesting. People online are speculating that this might be Baron Trump making these trades, going both long and short on the markets with perfect timing. The rumors say he's never lost a single trade and is pulling in massive profits every time. Look, I personally don't think it's actually him, but here's what we do know from our previous analysis. This insider is currently holding long positions, and based on their track record, I believe they're going to stay long until we reach the absolute peak of this cycle. So here's my takeaway. We should probably follow their lead. What I mean is, don't get caught up in short-term trading right now. Instead, stay bullish and hold your long positions. My strategy is simple. I'm staying bullish as long as this insider remains bullish. When they flip, that's when I'll reconsider my position. It really is that straightforward. Now, here's something that caught my attention. Michael Saylor just dropped a bold prediction. He believes Bitcoin will grow 30% annually for the next 20 years. To put that in perspective, if you invested $10,000 today, it could potentially be worth $1.9 million by 2045. This is exactly the kind of bullish talk we love to hear. Michael Saylor has become the ultimate Bitcoin champion, constantly pushing the narrative that drives crypto markets higher. Now, will this actually happen? Honestly, I have my doubts. I think Bitcoin will eventually face its challenges and potentially fade away over time. But here's the thing. Until that day comes, we might as well ride this wave as high as it goes.
Well, we started and we had very little and Bitcoin was 10,000 and now Bitcoin's more than 100,000 and 97% of the Bitcoin is worth 10 times as much and somebody else, not us, has it. Right. So as a practical matter, what we're doing is we're monetizing and powering up this.
I totally get it. I just mean, if you owned all of it, would that change the entire behavior of Bitcoin?
Yeah, we wouldn't want to own all of it. We want everybody else to have their piece. The nice thing there is there's 160 companies that are capitalizing on Bitcoin in the public market, up from about 60 last year. So the Bitcoin treasury movement's exploding. And companies like MetaPlanet in Japan and Capital B in France and Smarter Web in the UK. And then there's a raft of them in the US, Anthony Pompliano's company, and 21. They're all capitalizing. The big idea is I take digital capital, I issue digital credit, and a digital credit instrument can either be longer duration or it can be higher performance. We're offering 9% dividend yield with Stretch. The average money market's 4.2% dividend yield. No one would ever want to give a 9% perpetual yield in a bond that's backed by real estate or backed by gold or backed by any conventional fiat asset. But we're investing in Bitcoin, and my 20-year forecast for Bitcoin is 30% a year ARR. So it's easy for us.
Yeah, I mean, that is pretty insane if it does happen, guys. But here's the thing. All we really need is some positive news to keep hitting the market, and we'll see those pumps continue. That's honestly all that matters right now. And here's a reality check. It doesn't even matter if the news is completely legitimate or not. Why? Well, in the long run, fundamentals do matter. But in the short term, not so much. Because let's be honest, our entire global economy is essentially built like a house of cards right now. So when it comes to real versus fake news, the market doesn't seem to care. What actually moves the needle is whether prices go up or down. And hopefully, they keep going up. Speaking of positive developments, we did see some major white swan events today. Get this, the Federal Reserve is actually looking into creating payment accounts that would give crypto and fintech companies direct access to Fed payment systems. This is absolutely huge news. This is absolutely wild. So this breaking news just dropped, and I'm pretty confident this is exactly what launched Bitcoin to that 114,000 level we predicted yesterday. Remember those spidey senses we talked about? They were definitely onto something. Let me break down what this actually means. This comes from Eleanor's analysis of some massive news from the Federal Reserve's Payments Innovation Conference this morning. Here's the game changer. Governor Chris Waller just announced that the central bank is proposing something completely new. They're calling it a skinny master account. Basically, this would give all legally eligible institutions direct access to the Fed's payment systems without having to go through partner banks anymore. Now, these wouldn't be full master accounts. Companies wouldn't get perks like borrowing directly from the Fed. But here's the kicker. Every legally eligible entity could potentially get one of these accounts, and they're not planning to change the current eligibility rules. This could be absolutely huge for crypto and fintech companies. So essentially, this new Master Account Lite would give the Federal Reserve the power to fast-track approval for innovative financial companies. We're talking about fintech firms, stablecoin issuers, and cutting-edge payment companies getting direct access. And guess what name keeps popping up? Ripple. This is giving me serious Ripple vibes because they're exactly the type of fintech company that would benefit massively from this. This is absolutely huge for companies that have been fighting for years to get Fed master accounts. Take Custodian Bank and Kraken, for example. They've been battling for this access forever, with Custodian even taking the Fed to court over it. But here's where it gets really interesting. This could completely fast-track access for companies like Ripple and Anchorage, who just applied for these accounts this year. I mean, when you think about the implications here, this is honestly pretty mind-blowing. We could be looking at a complete game changer for the entire crypto and fintech space.
Why wasn't anyone from Ripple there? Oh, and get this. Apparently their chief legal officer, Stuart Alderodi, was actually there at the conference. But here's the thing. They've already been working behind the scenes with the Fed for years now. So honestly, this announcement might just be making official what's already been happening in the background. Here's my bold prediction for you. I think we're about to see some major XRP news drop that's going to send it absolutely flying. We are literally at the finish line. Everything we have waited years for is at our doorstep. Look what they say. This is in that same meeting here.
Good morning. All right. Well, thank you, Susan, and good morning to everyone. It's my pleasure to welcome you to the Federal Reserve Board for our first Payments Innovation Conference. My objective in creating this conference is twofold. First, I wanted to have a conference that focused on the new technologies that have come from the DeFi and crypto worlds and how they are entering into the mainstream payments ecosystem. My goal is to have a vibrant discussion about payments between traditional payment incumbents and the new entrants from the DeFi world.
It's all about payments. This conference and meeting is all about payments. By the way, what targets payments to the highest degree here? It's XRP. Do you guys understand how it will play a pivotal role in the new financial system? Simple as 1, 2, 3.
Second, I wanted to send a message that this is a new era for the Federal Reserve in payments. The DeFi industry is not viewed with suspicion or scorn. Rather, today, you are welcome to the conversation on the future of payments in the United States and on our home field, something that would have been unimaginable a few years ago. My view for the Fed from now on is embrace the disruption. Don't avoid it.
Embrace the disruption going forward. Wow, we told you accept reality or die, right? You either accept or get damn cannibalized.
As you know, we are well into a technology-driven revolution in payments, and I'm here to say that the Federal Reserve intends to be an active part of that revolution.
A revolution in payments. It's all I don't. I know they never said XRP here. I don't even have to watch it to know that, right? Because they'll never say it in plain sight, but indirectly they would. Such as, what's revolutionizing payments for trades?
A number of technological advances are transforming the payment system. Stablecoins and tokenized assets, making use of distributed ledger technology. The rapid adoption of artificial intelligence AI, and increasingly the convergence between these innovations and the traditional financial ecosystem. This includes the institutions and infrastructure that our economy has long depended on to operate a safe and efficient payment system. And yes, this also includes the Federal Reserve. The revolution in transforming payments is demanding change everywhere. And I will say more in a moment about some new ideas that the Federal Reserve is studying to support those innovations. I have spoken before of what I see as the two broad models of payments innovation in our market economy. The first is private sector-driven innovation. Most innovation comes from the private sector, which is motivated and best positioned to allocate resources and take risk with new technologies. The second model is when public sector entities, such as the Fed, build platforms and provide services that enable the private sector to more readily and rapidly expand new services to its customers. This should be done rarely and in limited circumstances where it addresses a specific market need.
You know what I find so weird about this conference is that they shouldn't even do it because there's no point of doing it. What the purpose of this meeting, by the way, is to tell the public that they're going to change systems, right? But they're not going to willfully just accept a new system. It's going to be through force, which will be a crisis, right? So this is all a show on what they're doing here. In my honest opinion,
The The posture of public institutions, including the Federal Reserve, should be to acknowledge and embrace private sector innovation that can improve the payment system while preserving its safety and stability, which are as essential to the new generation of innovators as they are to legacy institutions. Now let me pull back a moment and remind everyone how we got here. Since nearly its founding, the Federal Reserve System has worked to facilitate payment and settlement system efficiency alongside the private sector. From the beginning, the clearing services provided by the reserve banks obviated the need for daily movements of cash in armored cars with heavily armed guards. Long before we started speaking of the payment rails that are facilitating the kind of innovation we're discussing today, the Fed was running trains on steel rails.
Yep. Now, it's taking days on days to transfer money across the globe. Plus, it's expensive. Plus, it's inefficient, right? All that needs to be updated, and it's only the one thing that it comes back to it, XRP, literally.
To deliver and clear paper checks traveling across the country. FedWire began conducting interbank transfers through telegraph wires in the early 20th century. Fast forward today, where we have multiple infrastructures that settle interbank transfers in real time. Today's conference will focus on private sector-driven innovation. We have assembled 100 private sector innovators who are leveraging cutting-edge technology to create new possibilities in the payments landscape. Our panelists are engaging in integrating traditional financial payment rails with distributed ledgers, developing new products and services in the digital asset ecosystem, and leveraging AI in the payment system. It's worth noting that the firms engaged in these activities include banks, asset managers, retail payment firms, technology companies, as well as crypto-native fintechs. This is an acknowledgement that distributed ledgers and crypto assets are no longer on the fringes, but are increasingly woven into the fabric of the payment and financial system. Now,
Indeed, guys. Right, we know it's going to be updated and upgraded in due time. So all we need to do is just wait, right? They're going to flip the switch soon. And tomorrow's going to be even bigger. There's a major meeting happening alongside a flurry of crypto activity on Capitol Hill, including 2 industry roundtables. You can see there's just an incredible amount of positive momentum building for the entire cryptocurrency industry right now. And here's what I think is really happening. All of this is setting us up for another major pump. Think about it logically. Would all this positive news be coming out if the market was about to crash? Absolutely not. It's as simple as that. When you see this much institutional activity and government engagement, it's a clear signal that we're heading higher. So get ready, because we're about to see some serious upward movement. And just like we've called it before, we're calling it again.